Welcome to Homebuyer School, brought to you by Brookfield Residential.
So before we begin, if this is your first time on this channel and you want to get the latest strategies, tactics, and tips on home buying, click the subscribe button below, hit the little bell so you don't miss anything.
Hi everyone, and welcome to another edition of Homebuyer School. Today I'm joined by Troy Champ, mortgage advisor with the Mortgage Tree. And today the question we're going to answer is, what happens if I can't afford a down payment? So Troy, what if I don't have enough money for a down payment yet I really want to buy a house? Besides the answer, then don't buy a house.
Well, yeah, for sure. So there's a few options out there. If you're building something brand new, it usually takes about 9 months for the property to be built. So oftentimes the builders will allow you to save up that portion of the down payment during the course of construction. That's the nicest way because the builder doesn't charge you an interest. Whereas if you go and get a loan, you're paying interest to the bank. Another very common way is to get a gift from a family member. So if you have a family member, you're lucky that way, to be able to gift you a portion of your down payments, the banks will accept that as well. Another option would be if you qualify under the Flex Down program, which means that the bank would allow you to use a credit source to fund the down payment. So you can go and get a loan, line of credit, credit card, anything facility like that, and use that for a portion or all of your down payment.
So you can actually go apply for a credit card and use the entire amount, which I'm not sure if you'd ever recommend that.
No.
Use the entire amount to pay for your...
For sure.
Yeah.
So in some situations, maybe credit card is not a best option, but personal loan, line of credit, that may be a great option to get you into the housing market, just if your inability to save up for that money.
When you say gifting, does that also mean other people's mortgages? So let's say, as a first-time homeowner, let's say your parents have a mortgage, could you use the equity on your parents' mortgage as a down payment?
Well, if your parents wanted to set up a line of credit, that's a common way to do that. So your parents would get another credit facility secured by their house. So they would do a line of credit. They call it a HELOC in the industry, home equity line of credit.
Okay. And
it's secured against their property, and then they could use that line of credit to help you purchase your property.
Okay. Well, let's say we don't have, our parents aren't able to help in any way, shape, or form. Is there anywhere else I can get some down payment assistance?
Yeah, there's a few different options out there. One is the most common one is attainable homes, where you can apply for through them. There's an income requirement that your income's not above a certain level, and they'll help out with your down payment. And they require a percentage of your sale proceeds back when you do sell the house down the road.
And is attainable homes across Canada?
It is.
Okay.
Yeah.
Awesome. Anything else in terms of helping someone who can't afford a down payment?
I think those are really the only options. You do have to have that 5%. At one time, we were able to finance 100% of the purchase price, but those programs have all been removed in Canada. So you do have to come up with that 5% somehow.
Awesome. Well, thank you very much, Troy.
You're welcome.
Thank you very much, everyone, for joining us, and we'll catch you next time.
That's another edition of Homebuyer School. Tune in next time for more expert tips and tricks. And visit homebuyerschool.ca to bring you one step closer to finding your dream home. As with everything, it would be great if you like and share our videos. Also, please let us know if you have any home buying questions you want us to answer.